Hey guys, coming back at you with another Set It and Forget It Sunday. I'm going to go over my plays for the following week. Before I do that, let's go over the plays I called last week. So as you might have paid attention, if you paid attention to the news, you might have heard that there's continued COVID Delta fears that are weighing down on the market. We've had a minor correction in the past week because of that. Some of my calls resulted in exercises, which means, I try to sell puts at a strike price where they don't get exercised. When I sell a put, I sell it for a strike price, and as long as the stock doesn't go below that price, I don't have to buy the stock, and I keep the premium for the contract free and clear. The premium might range anywhere from 0.5% to 2.5%. If the stock price goes below that strike price, I'm forced to buy the stock, and my basis is the strike price I bought it for less the premium I earned, and that's my basis. And so you'll see that because of the COVID Delta fears weighing down on the market this past week, about half of the calls I called out ended up getting exercised. So without further ado, let's look at some of that stuff. So we'll look at the exercise stuff first. So as I said, these are the options where I didn't quite call an accurate floor, which happens from time to time. When this happens, I like to do the wheel. So I sell puts for 1 to 2%, 1 to 2.5%. And then if I get exercise, I turn around and sell calls from anywhere from 0.25% to 1.5%. And I'll do that, and the stock goes around and around, and I just keep earning premium. And so these are the stocks that I didn't quite call an accurate floor: Blink, Marathon, MVIS, Riot, Viacom. You'll see that all of my basis is above what I can sell it for. So I had a strike price of $31, less the 31 cents that I earned for entering in the contract. My basis is $30.69. I can only sell it for $30.65. So if I were to sell it now, I get a loss of 4 cents per share. So what I'm going to do is I'm going to turn around and sell calls for $32. So if I bought it for $30.69, I can sell a $32 call and get 2.25% return on the initial $3,100 I thought I was investing. So you can see this is the wheel in action. I turn around and I'm getting premium revenue by selling calls. All of these stocks are pretty much the same thing. You'd be in a loss position, so I suggest if you entered any of these plays at the strike prices and the premiums, that you turn around and sell calls until the stock goes back up. Now let's look at the stocks that I did call right and that it expired out of the money. These are the stocks where we kept the premium free and clear. So if you entered in any of these contracts, you would have earned anywhere from 0.5% to 2.5%. One thing to note about these calls, just because they expired out of the money and I called an accurate floor, that's not any. Even though I have some experience with these stocks, that's not any kind of rocket science I figured out. Some of these very same stocks have had large corrections in the past weeks, and so because of these large corrections, they're already weighed down on, and some of them are pretty close to historical floors. Halliburton, its historical floor is about $19 right here, and you can see that's what I had called the put for. Tupperware is pretty close to a historic floor, and when I say historic, like in the last 6 months. Robinhood, since its IPO, it's at a pretty historic floor. Workhorse is definitely at a historic floor. So the fact that these didn't get exercised is not like, ooh, black magic, John knows what he's doing. It's just, I sold puts at stocks that they were near their historic floor. So this is, this is common sense what you would do. The fact that if a stock is at its historic floor, there's all this market support propping up that stock, and so of course you want to sell puts there because it's unlikely to go down further because there is people to buy the stock before it keeps going back down. And also, the stock has stopped at that floor because there's no one more to sell stock, right? The reason stock falls is usually because you have a lot more sellers than you do buyers. Well, people who are holding the stock don't want to sell it at $9. And so that's why it's at a historic floor, because people would buy it at about $8, but no one wants to sell it at about $8. And so you can sell puts pretty much here all day long as there's not a recession, and you're going to make premium. This is nothing's guaranteed 100%, but statistically you're going to have a better shot of making a profit when you're selling puts on a stock that's near its historic floor, right? So with puts, you make money if the stock goes up, you make money if it goes sideways, and if you space your strike price a little bit above, space your strike price a little bit above the market price, even if the stock falls, as long as it doesn't fall below what you called it for, you're going to make money. So you're making money as long as the stock's not going below your strike price. And so it's easy to set a strike price when you're at a historic floor. Now let's go over the options I'm calling for the upcoming weeks. If we look at 9/13 this week, you'll see that generally there's chance of profitability calc. As always, this is not something that I create. I get this from this website, optionsprofitcalculator.com. This calculates the chance of profitability based on naked puts. I sell cash covered puts, which is more conservative, so the chance of profitability is higher. But I use this as a general sanity check. So you can get these. You can calculate these yourself at any time that you're doing options trading by just going to this website. You'll see that generally the chance of profitability, not excluding the two lowest ones, but everything else ranges from about 83% to 90-something percent. And the reason that the chance of profitability is so much higher this week than say last week, because of these continued COVID Delta fears that are weighing down on the market. I've gone through two corrections so far in the past months, and I've learned that it's better to open up. If this is your market price and here's your strike price, it's better to open up your strike price to give the stock room to fall rather than getting stuck in stock and now you're underwater in your basis. So it's better to maybe for 1 or 2 weeks earn 0.5% or 1% and then go back to earning higher rates of return once the knife has stopped falling, rather than trying to catch that falling knife. So so you'll see that the rates of return are a little bit lower than some weeks I've called in the past, and the chance of profitability calc is higher because I'm being more conservative. The two caveats, the two exceptions to this are Viacom and MVIS. Both of these stocks are, once again, they're near historic floors. After the Archegos incident, Viacom bottomed out at about 36, 37 for a day, and it hung around at 38, 39 for a couple of months. And then it crept up to like 43, 44, and now it's back down to 39 because of the market correction. So this is near a historic floor. Same thing for MVIS. MVIS's historic floor is about $10 to $11. It might go a little bit below that for a day or two, and then it pops back up because there's that support pressure that's propping up the stock. No one wants to sell MVIS at $11. They're happy to buy it at $9 or $10, and then they wait for it to go back up and they sell it at $14. So these are near somewhat historic floors. When I say historic, once again I mean 6 months. So these are near like 3 to 6 month floors, and so because they're near historic floors, I'm more comfortable selling closer to the strike price because I know there's that pressure that's propping up the market price. And so I'm fine with a lower chance of profitability because I know that that calculator doesn't take into account historical floors. It just takes into account volatility and what the current market price is and the premium. So because these are near historic floors, these are two options that I'm eyeing for a higher rate of return, and the fact that they're closer to their floors, it's less likely that the stock's going to fall further and I'll get forced into the stock. And you can see Viacom, it's usually in the past couple of weeks, it hasn't been very volatile. And it's usually like, I only recommend, an option that might get you 0.5% to 1% return, whereas this is 2% return. And so you can see that, we are close to its floor with how comfortable I am with this stock, or I believe it's close to its floor. As always, nothing's 100% guaranteed, but, if you've been following this and if you understand puts, these are pretty, good investments that I'm looking at for the upcoming week. So guys, once again, these are the things I'm looking at for this week. Just a quick recap: we have chance of profitability calcs from 77% all the way up to the mid 90s, 94%. Rates of return from like 0.6% somewhere right here, all the way up to 2.5% for, or not 2.5, 2% for Viacom, Viacom below it. I try to aim for, rates of returns to 1.5 to 2.5%, but for times like this, when the market's going through a correction, you want to open that up and get less return so you don't get stuck in stock. Guys, I hope you're learning stuff. For me, I hope you're paying attention to the market. At the very least, if you're not in, making money off of puts, if you're not making money off of wheels, I hope you're investing in your money. Don't keep your money in money. The Federal Reserve is printing like crazy. Inflation is through the roof. Put your money into something, whether if it's, earning insurance premiums like this of 50% per year. I'm already at only 4 weeks in, 4 months in, and I have 2 accounts, one that I strictly manage according to this philosophy, and then another account that I do reckless stuff with it. In the account that I'm not doing reckless stuff, in the account that I'm just adhering to this philosophy, I'm at 32% ROI in 4 months. So this is a great way to have a high yield savings account. The caveat being sometimes I get stuck in stock. If you have a 0% interest credit card that you can use in cases of emergencies, I'm fine taking a 3 or 4% hit over a year if I'm getting 30% plus return in a year. But that being said, guys, there's lots of inflation. I hope you're putting your money in stocks, even if it's in companies you like, right? Invest in Google, invest in Facebook, invest in Amazon, and also invest in smaller companies like Ford. You can milk as long as you invest in shares of 100 shares at a time, you can sell out of the money calls for, 0.5% return, 0.25% return per week. 0.25% return per week times 50 weeks, that's like 10% a year. So if Ford goes up 5% a year, I'm just making up numbers off the top of my head, right? But if Ford goes up 5% a year and you get a 2% dividends, and so you're getting 7% before you start selling calls, and then you add that 10% selling calls, now you're getting almost 20% on your money every year before you're only getting 7%. So guys, it pays to be in revenue generating assets, whether if you're investing in real estate and renting it, or if you're doing this and you're, either selling puts or buying stock in companies you like. You don't have to look at the stocks that I like. Look at the stocks that you like. Look at the stocks that you use. And it's probably a good idea to invest in those stocks. You drink Coke, buy Coca-Cola. You like shoes, buy Nike. Whatever it is you like to buy, you should be investing in those stocks, because not only is the stock market gonna go up because of inflation, but those companies are going to remain profitable. And then on top of that, you can go ahead and milk call revenues. But guys, just try to protect your money. Inflation is going to eat it away, 4 or 5% a year. So you just got to be doing something so that, your hard-earned money is not slowly taxed away from you indirectly by the Federal Reserve. But, with that being said, guys, I hope you like the material. I hope you're learning. Please like, subscribe. If you have any stocks you want me to look at, or if you have any comments below, or if you want me to explain things in a different way, feel free to let me know in the comments below. Thank you for tuning in, and I hope you have a great night, guys.